Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multi-family real estate investor, Barri Griffiths. Now today we're joined by Michael Becker. Hey, Michael.
Barry, thanks for having me on.
No, thank you, man. I'm really excited to have you on the show. I was telling you off air, I've listened to so many of your podcasts and learned so much from just listening to you. And that's the great thing about podcasts, I was telling you, is that you get into people's ears, and I felt like I knew you before I even spoken to you. So it's a little bit of a strange dynamic, but a great one at the same time. So thank you so much for being on the show. This is going to be awesome. But before we want to get started, you want to give people a little bit of a sort of essentially a bio of yourself?
Yeah. Mentioned Michael Becker. I'm based in Dallas, Texas. My professional background is in commercial real estate lending. I was a longtime banker, loaning money to other people, and made a bunch of apartment loans. And kind of through that process, realized I was on the wrong side of all those deals. So went out about a decade ago. Started doing some real estate, and about 8 years ago left. Started doing large scale multifamily syndications. Left the bank and been doing it. So about, I guess we're about 12,000, 12,000 units, something like that. And we sold 4,000 to 5,000. We'll probably finish this year around 7,000 in the portfolio, give or take. We're in escrow, about to close on 2 deals in San Antonio for $106 million. And as you mentioned, I'm the co-host of Old Capital Real Estate Investing Podcast. So you find that on iTunes or Stitcher, or probably anywhere you hear my voice, you can look for the Old Capital Podcast.
Yeah, I highly recommend that. I've learned so much listening to that. It's such a great resource. So I appreciate you guys doing that, especially considering how busy you are, right? But going back to where you said you were in the lending side initially, what made you want to go into the lending? Was it something that from school you were like, oh, I think that makes sense, or was it just something you landed in?
I got a job working away through college. I was a bank teller of all things in college, and then I got in college, just got a finance degree, didn't really know any better. And then right when I graduated, got the opportunity to go into the credit department of a bank and learn how to underwrite deals, and then became just a loan producer. So it's kind of fell into it. I wasn't really too much thought given to it. Just kind of happened, really, to be honest with you. It was a great education, really learning how business is done and people put deals together. And when you think about these transactions, I mean, most of his debt, probably anywhere from 2/3 to 3/4 of the money comes from your lender in a typical transaction. So it's a really key component to it. And I just got a lot of experience, just doing deal after deal after deal on the lender side. I really was great education.
And was that just more on the lending side, or were you also learning how people were putting these deals together, how they were structuring, how they, what their business plan was, what kind of renovations and stuff like that? Were you learning kind of that aspect as well? Or was it just strictly on the lending side?
That as well, right? And that was kind of just being, observant and curious, to observing my clients and kind of seeing the good ones and the not so good ones, and trying to emulate and do the things that the good ones were doing, and try to avoid some of the mistakes that the not so good ones were doing. And it's kind of take a little bit of cues off all of them. I mean, they're really those pretty hard. I kind of came in the hard way, or what I've noticed, Barry, a lot of people that go from a vendor into the space, usually it's either like a lender, like I was. Sometimes it's like private equity, where they work for like a private equity shop. That's another common one where people come in, and coming in as a lender is a little harder because you're bred to be pretty conservative. So it's to take that risk and not have all the right answers and a perfect puzzle piece and still do the deal anyways. That a little hard to kind of overcome that background, but it was a really great background for me and worked out well.
So was that your biggest challenge, going from being on the lending side and looking at stuff that, to then being on sort of the GP side and putting these deals together? Was that one of the biggest challenges, trying to lose some of that conservativeness that was bred into you?
Yeah, you gotta it's easy when you get a paycheck to do a deal, and there's no real downside to it. If you don't do it, you just don't get a commission or whatever. Yeah. But when you're putting your own money up and you got deadlines, if you can't raise the money or qualify for the loan or whatever, all the various things that go into these things, it's it's a lot more nerve-wracking when you're the one having to actually post the money and do it. So it's a lot easier said than done. That's why a lot of people that are either bankers or brokers, I mean, they know a lot of stuff, or they just haven't had the guts to actually go out and do it. Sometimes they're a little too smart for their own good. That was certainly a big hurdle, you know. And then I was pretty well known in the marketplace. We did, you know, I mean, that probably that 3-year period coming out of the Great Recession did almost 150 loans on apartment deals in Texas. And so I knew everybody in town, and everyone pretty much knew who I was. A lot of the brokers were, but I had to get kind of everyone's perception of myself from being a lender into being a principal in the deals, and found it's pretty easy. You just got to do one deal, then everyone knows you can do it. So, then, you know, like I said, again, it's a little easier said than done, but it, you know, it doesn't take very much to, once you actually get that first deal done, you know, your confidence level goes up dramatically as a sponsor, and then the market perceives you as a person to actually get a deal done, and you'll start getting, you know, more and more opportunity put in front of you.
What yeah, and going from the lending to again to the GP side of stuff, to putting these deals together, what skills do you think you had to learn, or do you have all the skills, or was there some particular skills that you had to pick up pretty quickly to be successful?
Yeah, I mean, I felt pretty good about, you know, underwriting the deals because it's had a lot of repetition from, you know, we got to look at it from a little different perspective, but you know, the basics of it, it's not rocket science. At the end of the day, multifamily is pretty simple. You know, it's not always easy to execute, but the concepts are pretty simple. You know, I had a lot of relationships, like I mentioned, was a matter of getting them from viewing me as a lender into a principal. So that was a challenge. And then, you know, making sure you're able to communicate with your investors. I had a pretty good level of communication just from being, navigating the world I was in. And then unfortunately I had to not only originate loans, I had to service my own loans. I was kind of my own portfolio manager. I was a balance sheet lender. So I had to approve the draws and things like that as well. So I got to, you know, meet a lot of the contractors. And when we started out, we did a lot of value add, you know, workforce housing, multifamily properties. And so I had a lot of connections just by seeing who all my clients were using, and you know, how to kind of prove the draw so they could pay their bills and et cetera. So had a lot of resources. Just a matter of actually, you know, like I said, getting the guts and going out and actually, you know, putting a deal out there and put your neck out there and actually doing it. So really was I had a lot of skill sets. So just really, how do you then get the market's perception, both from the brokerage as well as like your equity? How do you get that first people to bet on you to give you money? Those are kind of the nerve-wracking things.
Yeah, what a great what a great place to be, to transition from, right? Like you said, you were meeting these contractors, learning how they're doing, building those relationships with all these people. And so when, I'm sure it was a pretty, not smooth, but not as hard as it would be if you were starting from nothing, right? So that's pretty
That's right.
cool. What was your first deal that you did then?
So we bought a 120 unit deal in 2013, called the Bay Island Apartments in Garland, Texas. So a suburb of Dallas. It was built in the mid 70s. I want to say like 74, 75. And I think we paid 3.8 million for it. So I think that's somewhere around 30,000 a unit, if I remember my math right. And then we, you know, put probably, you know, 3 to 5,000 a unit in capital into it. We sold it for, I think, 6.4 million or something like that, 6.45 million, in you know, was that about 30 months, I think. And then, so about 55, 60 a door, 55 a door, I think. And then the guy who bought it from me sold it for like 80 a door. Then I think it sold again for about 100 a door. So, you know, that tells you stuff that was trading for about 30 a door is now worth 100 or maybe a little bit more, 1,000 a unit. So it's amazing to see the growth in the last 8 years. But, you know, the rents have more than doubled from the time we bought it. I'm sure the rents were $600-700, and you know, they're probably $1,200 now at that place.
So that first deal was a good size one. Did you have partners, or was it mostly you taking that one down yourself?
Yeah, so we had one main equity partner and us, really. So we were fortunate. My now business partner, was working for a broker out of Los Angeles that helped I know with people in LA and Orange County buy properties in Texas. I made a loan to one of their clients, and that's kind of how I met him back when I was working at the bank. And then we formed a company, started a deal. And so he had some equity or an equity partner, and they needed kind of the boots on the ground in Dallas because he was in LA at the time. And so we kind of came together, and then he had one single equity source. And so we took a very small amount of the deal and made next to nothing on it, but it was our first deal. And, you know, the guy bet on us when we had no track record really. So he kind of took a bet, and it worked out well for him. We did, I think, 3 of the first 4 deals we did with the same guy, and were able to scale up pretty quick with them and made him a ton of money. And it really got our start in the business and really allowed us to, get a presence and get to become a real company real fast.
So the first, those were three of the first four were joint ventures, or how did you
Yeah.
structure them?
Yeah, joint ventures. So yeah, we would put in, I think, 5% of the money and get 10% of the ownership, something like that. And then he put in, 95 and kept 90% of it. It's real simple. I think we had a small asset management fee and a small acquisition fee. So it was really, really simple. But again, we had no track record. I was working at the bank, and that was a good way to kind of get credibility out of the gate. So the first 6 months, we ended up doing 4 deals and 800 units in 6 months. And then that's when kind of really we were really kind of stopped doing these JVs and really started doing our first syndications and really scaled up at that point. But we made very little amount of equity relative to what we can command today in the marketplace. So it was very much under market from a compensation standpoint. But that was really, I was trying to play the long game. I was really trying to get to a position where we could scale and grow, and I really wasn't so worried about making a bunch of money today. I really wanted to get get a little bit of presence to myself, get a little bit of a scale to myself, and set myself up for the next part of my career. And that's exactly what happened.
Yeah. So what was your first actual syndication then? Do you remember?
So it was the 5th deal we did. We bought a 160 unit deal in Denton. So yeah, that was our first syndication. We had to raise, I think, $1.8 million, and we had, I think, 14 or 15 people gave us $1.8 million in aggregate, and it was a little nerve wracking trying to go out and do it, and made a lot of mistakes along the way with being really inefficient and not super polished with raising money. And then from where we started to where we are now, it's an absolute machine. We just finished an equity raise, like I said, on a 2 property portfolio in San Antonio, raised $33 million from 220 something people, 225 people, something like that. Did it all in about 3 weeks. So it's amazing to see where we were, phone call by phone call, an hour at a time, trying to get $1.8 million on that first deal to, get almost, 20, 25 times that amount of money in about 3 weeks. And I do a webinar, and my team just kind of does all the paperwork for me. It's amazing to see the growth.
That's incredible. Yeah. So that first deal, I think that's the challenge for a lot of people, raising money on the first deal. What was your, how did you go about it? And then what would you have done differently, I guess? If you
I think I have a lot of little sayings, Barry. And one of them is, the first people that give you money is kind of like, someone told me once, is like the 3F rule, right? The first people that give you money are friends, family, or fools, right? People that know you well and people that don't know any better, right? Those are the people that are going to bet on you at first, because you don't have a track record, and it's a big risk when you don't know what you're doing, right? So that's kind of it. I just had a network through like my professional network at the bank, and just people I knew, some clients and some investors of theirs, and it was kind of the early stages of the syndication, which is so prevalent now, and everyone's doing it. And there's all these podcasts out there that there was none 8 years ago. Now there's a bajillion of them, which is great. And there's a lot more software, and the democratization of raising capital is so much easier, and it's a lot more accepted than what it was, 10 years ago. It doesn't seem like that long ago, but it really has matured quite a bit as an industry. And so, it was just a lot of people I kind of knew professionally. They just kind of bet on me, and I believed in it. And then we kind of scaled from there. But a lot of people, it's like your friends and your family, and that's kind of where you start. And then once you kind of get those deals done, then it becomes easier and easier. You get referrals. And we started the podcast, I think, in 2014 is when I started the podcast, if I remember right. And we started out, we had joked, with Paul Peoples, my co-host, I was joking with him, we had dozens and dozens of listeners when we started out, and then now we get 30,000-40,000 downloads a month, which is amazing to me that we get that many on a niche subject like apartment investing. But we get it, so we get a lot of people off of that. So it's a matter of getting a platform, and then you got to be consistent, and then over time it just kind of grows and grows and grows, and you never know where people are going to come find you. And maybe something I hear me talk to you a year from now on your podcast, and someone's going to reach out to me and maybe give me money a year or two down the road. Like who knows? You never know where it's going to come from. So we try to do everything, go to events, podcasts, referrals. Those are kind of the main ways we get new investors right now.
Wow. And then is your role now just on the capital raising side of stuff? What do you do in the business?
Yeah,
Do
so
you
my,
do
my main
everything?
functions really are, I kind of basically run the company. We got teams, so I got my partner and I, but my main role is, finding money and then finding deals. That's kind of the highest and best use of my time. Is I got to work with investors to make sure we have capital when we have time to do a deal, and then work with the brokers to try to source opportunities. Everything else is sort of noise. It's like important. You got to do your tax returns, you got to asset manage, you got to do all your capital projects, you got to make sure all the bills are paid and collect all the rent, do all those things. But at the end of the day, the way you make money in this business is you got to find money and find deals. So that's really what the highest and best use of my time is. And everything else you can kind of, get off of myself and onto an employee largely. While I'm responsible for everything, I can hire an asset manager and he can do a better job doing that than I ever could, because he's a professional at it, and I'm a banker, not into operations as well. So we kind of just hired a lot of people, and some of the stuff you can outsource to third parties, but a lot of it we just have a team member internally take care of most of that stuff.
Very cool. And you said it there, finding deals. Like we talked a little bit about finding the money and how you do that and how you've transitioned from when you first started. How are you finding deals now? I'm sure it's different to most people because you have an exceptional track record and you have a great presence there. But do you have to search for deals, or are people just bringing you deals these days?
A little bit of everything, right? We try to cast a pretty wide net. I mean, at this point, we're really focused too. When we started Barri, we're just in Dallas Fort Worth for the first like 5 years of our career, and then we expanded to Austin 3 or 4 years ago, and then now we're just expanding to San Antonio. So we're kind of just been real slow and measured. And my office is in Dallas, my business partners in Austin, so we have a presence in those two markets. And San Antonio is just hour and a half down the road from Austin. That's the same brokers that cover both those two markets, so the same brokerage communities. So really, it's kind of like they're the same market in a lot of respects. So it's just it's getting in a place and building that foundation and getting a track record. And we're in one of the larger markets. Dallas Fort Worth is one of the larger markets in the country, so there's a lot of opportunity here. And we, once you kind of get a reputation, we're able to monetize those relationships and reputation that we've built over the years over and over and over again, because there's all these different brokers that we have good long-standing relationships with. The brokers control a lot of the deals. So we're probably say 75% of our deals I think have been done off market. About 25% have been marketed, but with those off market deals, the vast majority of those have a broker somewhere in the middle of those, even if they're off market. So really working those relationships and hitting the phones and going. Like last night I went to an event. They had starting to have events here in Dallas when the brokers put it on. There's probably, I don't know, 200 different people that were invited there in Dallas Fort Worth, and a lot of different owners. And I knew a whole lot of them just from kind of I go to a lot of those types of things and just getting networked and, meeting this person, meeting that person. Then you just never know when I'm at that owner selling a deal a year or two later, and it's a marketed deal, or maybe it's off market and I'm putting a bid, and they got to know me at that event, or we went golfing or shot a gun, or who knows whatever you do. And then you get that little edge that you get that deal, or you get the opportunity to say, hey, SP Michael, if you can pay this price and do these terms, I'll go to you versus the next buyer. Those little things matter, and it's just a compounding thing over the last 15 years of my professional career. Just those little things compound over time, where it seems like it's easy now, but I have 15 years of doing this stuff that leads you to this unfair advantage that you get after putting 15 years of work in, right?
Yeah, it's a 15-year overnight success, right?
That's right.
I think
And
they
it's
use
these little things one by one. You never know what little thing is going to make the difference a year. Maybe it never makes a difference, and maybe it makes all the difference in a large transaction that you can make millions and millions of dollars off of. It's a really like a soft skill, and it's a lot of it's just being consistent, showing up, and not being a jerk. And that's a lot of life.
Yeah.
Yeah.
Yeah. If you can not be a jerk, I think it helps a lot with most stuff. But
That's right.
that's so interesting. So as someone just starting out, or someone who's got a little bit of experience, what is your suggestion to them in terms of finding deals is to build networks, build relationships?
Yeah, you got to get educated. So, when you're getting out, there's a lot of free resources like this podcast, lots of podcasts out there. There's, mentoring groups if you want to pay for it. There's a few reputable ones out there. There's some less reputable ones out there too, but, so making sure you get with a good one. and then understanding kind of where you're positioned and what you have and what you're lacking. I think of putting a deal together is kind of like a puzzle. Got all these different puzzle pieces. If you put them together, the picture becomes clear and you can do the deal, right? So you got to, where's your equity coming from? Where's your debt going to come from? How are you going to manage it? What's your roles and responsibilities? So, you got to have all those pieces kind of in place. And if you don't have that, you don't have money, you don't have a track record, can you get a partner to kind of compensate for where you're lacking? Maybe they can compensate for part of that. That's what a lot of people do, is they kind of partner up and go together at it, and kind of tag team match the deal, right? So tag team and go at it, and then it's about being getting in front of the brokers and staying at it. There's going to be a lot of rejection in this business, especially when you're getting going. You get a lot more no's and you get yeses, and you got to like take it, learn from it, apply that feedback and do a little bit better on the next thing, and then continually taking that feedback loop of what did I do wrong, and showing up and being consistent. And then eventually the brokers feel bad for you, and eventually they'll tell you what you need to do to win the deal. And if you can do that, then you'll get your deal done. But most likely it's going to be a lot of rejection for a period of many, many months. And then eventually you'll get that deal done. So it's just, it's like anything. You just got to train, you got to put your work in, and eventually it'll, kind of work itself out if you stick with it.
Yeah, and this is exactly why I was so excited to have you on the show. Yeah. You're just such a wealth of knowledge, and you put it in such a great way, and it's just such brilliant advice every time I hear you. So I appreciate sharing that. Before we get to the knockout round, anything else you'd like to share, or anything? We're going to do a second part of this for anyone listening. We're going to talk about the lending environment today, so everyone should stay tuned for that. But anything else you'd like to share? I know there's so much that you could share, but maybe one or two things you'd like to share with people about the success you've had and everything like that.
I mean, a lot of it, it's a really simple business. I mean, a lot of this is just about, being an effective and communicator, and being consistent and doing what you say you're going to do, and, not giving up. I mean, that's a lot of this. And, I mean, a lot of this, it's a lot of life. It's a lot about success in life. It's just about, being really self-aware of what you have, what you don't have, and what you're lacking, and being kind of grounded and kind of just focusing on trying to solve for the deficiencies that you have in your profile or your deal or your structure. And that's kind of it. You just got to just stick at it, and eventually you'll get it done if you do. And I think for me, some of the mistakes I've seen people when they're getting out, they get kind of the shiny penny object, and they'll do, some people just do multifamily and self-storage and this and that, right? Where, I'm really focused. I do, the same thing pretty much over and over again. We're in basically two markets effectively is what we're in. And I was in just one market for the longest time. And then we got such a big base, we kind of had a natural expansion. And then I might expand to another market here in the not too distant future. But, I've got, thousands and thousands of units under my belt before we kind of get to there. So I think people that try to buy a deal in Texas, another one in Georgia, and another one in North Carolina, they get themselves spread a little bit thin. And a lot of this, to do this job right, is you got to get deep relationships established, specifically within the brokerage community. And if you take all this time, you do all that work to do one transaction, and then you don't try to follow up and do more and more in that same market, it just doesn't make sense to me, because that's all the hard work and goodwill that you built. So, focusing on a market that's a little bit larger, so you have more opportunity, once you kind of build that track record and relationship with that marketplace, I'm just trying to monetize that over and over and over again. So focus on maybe a market that's got 1 million or more people in the MSA, that probably has enough multifamily units that you can then, transact, or, maybe some of those brokers that, I don't know a lot of these other markets, but maybe like someone and that sells multifamily, say in Florida, in Central Florida, they probably cover both Tampa Bay and Orlando and probably Jacksonville, for example. So you probably have a lot of crossovers, or maybe you can hit 3 different markets with the same brokerage community if they cover those same different territories. So just kind of every area is a little different, and every area has different brokers that are the kind of the lead dog. And when you're starting out, you probably want to start with kind of maybe like the junior broker. So every investment sale teams kind of has the hierarchy. You got your senior broker, kind of your mid-level brokers, and your junior brokers. And when you're starting out, you probably want to start with the junior broker. because they're hungry and they need to try to make a name for themselves like you are, and kind of grow together, and you'll be more likely to get them to spend time with you and give you access to deals, and versus trying to start with a guy that's been selling deals to people like me for the last decade or better. They already kind of have their roster of people. They're not likely to spend as much time with you. So those are some rambling thoughts of things that might be helpful if you're starting out.
No, that's brilliant. That's brilliant. That's fantastic advice. That's really cool. So thank you for sharing. But now it's time for the knockout round. So you told me a little bit that you were watching wrestling back in the 80s and even during the Attitude Era. So it should be some fun. So the first question is, what would your wrestling name be?
On the podcast, Paul Peoples, my co-host, calls me the mayor, so I guess he'd call me the mayor, right? But growing up, I did like Kerry Von Erich, so he was a Texas Tornado, so that was
that's a good one too. Yeah, the Claw, yeah, right, yeah, that's awesome. And why does he call you the mayor? Because you got to explain that as well. Because
we own so many apartments in one little part of town. He started calling me the mayor because we had I think 1,100 units in close proximity to each other, kind of assembled at one point in time.
That's cool. So every wrestler has a special move. What is your special move in real estate?
I think really what I was saying is just the power of focus, right? I just focus on one thing, and I'm become an expert in this one thing. I just do it over and over and over again, and I try not to deviate too much. I mean, there's always some variance along the way, but for the most part, I'm very specific and very focused on one thing. And I think the better, what is that Bruce Lee quote? He's not scared of the man that's got 1,000 kicks. He's more scared about the man. Practice that one kick 1,000 times. You get to master that one thing. That's riches are niches. So you find your thing, you master that one thing. I think that's probably a good way to really become successful.
Yeah, great advice. What's been the biggest body slam you've taken?
We had a deal that was we tried to sell it. Fourth time was a charm. We had it basically sold 3 times. The last time that didn't work was COVID got it. We had it awarded in early February, and the deal was supposed to close in mid-March, and then the COVID came and got it like 2 days before closing. So that was a real disaster of a deal. It took forever, but that was a real tough few months. And then we ended up getting it re-racked and sold in October of 2020. So we had an extra 6 or 7 months of ownership we didn't necessarily plan on having. But that was a pretty tough time. But just staying at it and not giving up and being persistent, and it just kind of worked itself out.
So was there a moment that you were standing on the top rope, getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Yeah, I think early in the career, it's just, when you're trying to do those first couple deals, or when, I was trying to go from buying, $3, $4, $5 million deals to go buy a $20 million deal, right? I remember thinking at the time that was all the money in the world, and it still is a lot of money, right? And how do you get that put together? And it's just infinitely bigger raise. And, I think at the end of the day, I was always trying to get myself slightly past my comfort zone when I was going. And so if I'd raised, $2 million, I might go try to raise $3 million or $4 million, and raise $4 million, maybe go raise 6 or 7. So just incrementally pushing the envelope. And that's kind of how I just systematically grew, just by just doing a little bit bigger, a little bit more, and just kind of getting a little bit past my comfort zone. Not too crazy, but a little bit. And that when you're uncomfortable, I think that's where kind of all the growth in yourself, whether you're, trying to work out and build up muscle, right? Or you're, trying to get courage and build your business and your database. I think just being in that slightly uncomfortable zone is where all the growth happens.
Yeah, absolutely. Well, Michael, this has been awesome. I'm excited for the second part. We're going to dive in a little bit more to the lending environment today. But before we go, if people want to get in touch with you, people want to find out more, where can they do so?
Yeah, I'll give 2 resources. So as we talked about, I'm the co-host of the Old Capital Real Estate Investing Podcast. You can find that on iTunes or Stitcher. Our website is oldcapitalpodcast.com. Or the company I run is a company called SPI Advisory. So you simply go to our website, which is www.spiadvisory.com. There's a contact us form. Fill that out. I'm always happy to send out information if you guys want to get into our database and look at our future deals.
Very cool. Well, you definitely didn't disappoint. That was an awesome, fantastic conversation. I loved every second of that. So I really appreciate it. Thank you so much, man. Have a great rest of your day.